Welcome back. We are now not at the beginning of the Bitcoin bull run, as that started in 2023, according to this swing trader, and something that we've been covering for quite a while on this channel. And now we are at the end of the bull cycle, entering the bear market. And so we are past the complacency phase, in my view. When you look at the psychological market charts, we are also well past the 550 days since the Bitcoin halving, which historically is the end of the bull cycle, as you guys can see from all the previous cycles. But there's a lot of people in this market that still believe Bitcoin bull run's about to begin. It's happening. Here it comes. All this excitement and stuff. And then none of this is based on data. The extended cycle, not based on data. The M2 money supply has been continually going up throughout the course of history, and we still have had bear markets. And so the question now becomes, and I've been getting this question asked a lot on this channel, is this the right time to short the market or to bet against the market going higher, at least in the short to medium term? And that's what we're going to be covering in today's video. We're going to talk about the quantum companies, the Bitcoin mining companies that pivoted to AI, and more importantly, the crypto companies. Make sure you guys are subscribed to this channel. We upload every single day of the year to bring you the latest happening in the financial world. Also, give this video a free thumbs up, because as you guys know, thumbs up are free. Crypto is not. Let's get right into today's video. Now, this trader that we have followed on this channel quite often, Jesse Olson, he said this is not the beginning of the Bitcoin bull run, as that started in 2023 with signs of reversal at the end of 2022. The monthly moving average is the final confirmation. If you are waiting for this, then you're late to the party. Better late than ever, as they say. Good luck. And this is something that we've been covering effectively since the middle of the year, since June and July of 2025. We have been telling all of my viewers here on this channel and laying out the thesis. Whether you agree with it or don't agree with it, we've been laying out the thesis that the bull market is effectively over. And anything that we saw after June and July, and we did see higher highs in the Bitcoin price, but this would all be just volatility, an end stage market exit liquidity entering the market, as we saw that as well with the Bitcoin treasury companies buying the Bitcoin from the early holders who were taking hundreds of millions of dollars of liquidity in cash to exit the Bitcoin cycle, or taking stock to exit the Bitcoin cycle. And then as soon as those stocks were unlocked, they sold the stocks on the open market, as we saw with Nakamoto. But there's still a lot of people in this space that are bulls. And at the end of the day, maybe they're going to be right, maybe we're going to be wrong, but according to our thesis, according to the data, according to the charts that we look at, well, yeah, the cycle's over. And those are the people that we are trading against. And so when you see comments, when you see bullishness, you have to ask yourself, why are they still holding? What are they waiting for? How much higher do they think that we're going to go in the market? And if none of that makes sense, then yes, betting against the market going higher, which means shorting or buying puts or getting inverse ETFs, is potentially the way to go. We are now starting to see capitulation. Now, we've covered Bitcoin and Ethereum treasury companies that have already sold their crypto. I mean, we're not even in the bear market yet. We're rotating into the bear market, which could take months. And they have already capitulated. And now we're seeing the big mega bulls and the influencers. This guy, Micro to Macro, with 108,000 followers, said, I've decided to exit all my 2x fund positions in Bitminer. This is a Bitminer ETF. We'll get to that in a minute. And Sol-T, which is a Solana 2x ETF for roughly $700,000, down about 40% on average. Now, basically, these are ETFs that mirror the stock or the crypto, but with leverage, right? So these are 2x leveraged ETFs. So you guys can see here the BMNU, which is the Bitminer Emergent Technology. This is Tom Lee's company. This is a 2x ETF. So if his stock goes up 10%, the 2x ETF goes up 20%. One goes up 10%, the 2x goes up 20%. But if Bitmine goes down 10%, then the 2x goes down 20%. And you can see the yellow line is the actual Bitmine Immersion Technology stock over the last 1 month. We'll pull this back up to 6 months. But this 2x leverage ETF hasn't been around that long. So we're going to keep it on the 1 month. You can see the yellow line is the actual stock and the blue line is the 2x inverse ETF. And so there's two ways to play this. Like, one, if you're long, you just buy this ETF, right, which has 2x leverage. But if you're short or you're betting against this stock going higher, you can either short it or buy puts on the ETF if the options chain is available. And so this is definitely a play here. But one of the things that the reasons I pulled up this tweet was because he's down 40% on average. And you can see over the last 1 month, right, from October to November, the actual Bitmine Immersion Technology stock went down about 34%, and the 2x leveraged ETF for this stock went down 65%. And so I get a lot of questions about selling into losses and why I would do that, why I would sell the bottom of the market. And really the answer is that sometimes you just need to shore up liquidity. You need to exit a losing position. Because although the position may be down 40%, you could say, well, that's the bottom. Well, what if it isn't the bottom? Then you can go down another 90% from where you are today and potentially go to zero. And this is what Micro to Macro explains further in this tweet. He says, key levels have been breached and the 2x leverage can grind you to zero if we have a few more bad weeks. It's very true that leverage is one of the keys that can send people to the poorhouse. And with warnings coming from SOFR and Mitchell Howell, I just have to listen. He says, I realize this is an abrupt shift, but when things don't go your way, it's smart to reevaluate. And when I think the NASDAQ and S&P 500, I see them both topping at this level, and I see a pretty much straight up path without any much of any pause. He said, note, I have plenty of other pans in the fryer, so if things turn around, I could still hit my $12 million goal, but I could care less right now and more about capital preservation. And this is really, really important, especially when we're rotating from one cycle to the next. It's preserving your capital. Because let's say you put in $10,000 and now you're down 50% or 40%, we'll just say 50%, now you're down to 5,000. Well, you can either pull that 5,000 out of the market and wait for better positions or rotate it into other positions that you think are going to perform better, even if they're inverse ETFs or inverse or shorting. Or you can ride that 5,000 to zero. And with these leveraged ETFs, ultimately on a 2x ETF, you just need a 50% drop and the ETF is wiped out completely, like absolutely completely. And you may say, well, how is that possible? Well, that's how leverage works. And this is where liquidation events occur because people get margin called. Now, the BMNU ticker has about $351 million of assets under management when I'm recording this video. And just to keep in mind, that's down on the 1 month, that's down 65%, right? So if you basically almost double that number, that's how much money was lost in this one ETF with leverage. But again, if you believe that the market is going down, and this is something that we've been talking about specifically with MicroStrategy, and we've been right, by the way, we've been so right about MicroStrategy, is the fact that if you listened and you agreed and you moved your positions into not being long or betting against the price going higher, which is effectively what MicroStrategy is doing because they continue to sell shares on the open market, regardless that the Bitcoin price is wavering and dropping actually. But we haven't really seen any precipitous drop in the Bitcoin price. I mean, what happens if we go to $50,000 Bitcoin? What do you think is going to happen to the MicroStrategy price? Puff of air is under this price. And so we've been calling the top since effectively June and July. And then we started basically started betting against MicroStrategy's price movement to the upside, believing that it was going to go to the downside. And MicroStrategy also has leveraged long ETFs, meaning you think the price is going to go higher. But there's also leveraged short position, or they call it inverse ETF, where it basically goes opposite. So if MicroStrategy goes up 10%, the 2x inverse goes down 20%. And so, as you guys can see here, over the last 6 months, the dark blue middle line, this is the actual MicroStrategy stock, it's down 36%. And again, Bitcoin was at all-time record highs during this time frame, and it still continued to decline. The daily long leveraged 2x ETF is down 70%. And there's a lot of people who probably got into it saying, "Oh no, MicroStrategy is so bullish. All the influencers are saying that Bitcoin's going to hit $500,000, so that means MicroStrategy is going to hit $1,000. So I'm going to make so much money here." And boom, down 70% in just 6 months. In just 6 months. Meanwhile, if you bet against this stock in the 2x inverse ETF, you would be up 55%, while MicroStrategy is down and the ETF leveraged long position is down 70%. And so the same thing could occur here. But again, it's about capital preservation. If you don't know what the market's going to do and there's just too much volatility, sometimes it's better to just sit in cash, regardless of what the Bitcoin maxis say about cash going to zero. Well, it hasn't gone to zero just yet, and you could still buy things with the dollar, and you probably will continue to be able to buy things with the dollar. And the president of the United States, he's even said that he's going to continue to make the dollar the world reserve currency. So there's no bad thing that you can do by just holding cash and not being in the market if you're not sure what's going to happen. But a lot of people don't do that. They'll be down 60% and say, "Nope, I'm just going to ride it to zero." I mean, I've seen comments on my channel that literally say that. They're like, "Well, I'm already down 50%. I'm just going to ride it to zero, and hopefully it goes higher." And it's like, that doesn't really sound like a sound investment thesis to me. But again, you do you, and I'll do me. And then that brings us to Arthur Hayes. Arthur Hayes has said in a new article, between now and when stealth quantitative easing begins, one has to husband capital, meaning hold on to capital, right? Expect a choppy market, especially until the US government shutdown ends. This liquidity drain is one of the reasons for the current softness in the crypto markets, given that the 4-year cycle anniversary of the 2021 Bitcoin all-time high is near. It's actually basically we're past it at this point. Many will mistake this period of market weakness and anew as the top and dump their stack. Yeah, I mean that's the play right now, because in my view, again, I'm not basing this off of my opinion or how I feel. I'm basing this off the psychological market charts, right? There's a lot of people who still believe that we're on this side of the chart. Going back to Jesse Olson's post, people are saying, "Oh, well, we're getting ready. We're about to take off. We're going to have the biggest bull market in the history of the world." It's like we're 18 months past the Bitcoin halving, which historically is the beginning of the rotation phase into the bear market. You can see that in every previous cycle. But everybody who's bullish seems to think this time is different, because Raoul Pal said out of 5,000 charts that he has, he pulled up one chart that says that we're going into extended cycle because the business cycle, Cryptoviser, the business cycle. I mean, explain that to me. Explain to me how the business cycle has any impact, or has historically had any impact on the Bitcoin price. And by the way, if Raoul Pal really believed that, he wouldn't be selling 30% of his portfolio by the end of 2025, which is one thing that he said he was going to do. So yeah, we have that. Anyway, this user on X said this. He said, with Bitcoin taking and MicroStrategy down 11% year to date, Saylor seems to be getting desperate. And I would agree. Michael Saylor, MicroStrategy getting desperate. So desperate that now they're tapping international markets to get more money, to get more Bitcoin. Now, I know many of you probably already know this, but the newest capital raise using STRE, I don't even know what that stands for, but anyway, Stream, I think, which complements the already Stride, Strike, Stretch, and Strive, comes with an important clause. It says if MicroStrategy is too broke to pay dividends on this new preferred stock for Europe, it will dilute holders of its other securities to come up with the cash within 60 days. Let's see if this is sufficient assurance to induce investors to risk their capital for 10% yield. And the answer is yes. Some people will definitely get into this. Some institutional investors will definitely get into this, but there is a lot of risk here. It says if strategy fails to declare a regular dividend on or prior to a regular record date, such failure will constitute the issuance of a notice of deferral. Upon the issuance of such notice, strategy will use commercially reasonable efforts over the following 60-day period to sell Strike stock, Stride stock, and Class A common stock, or other junior stock to raise proceeds in an amount sufficient to cover any deferred dividends. So effectively, what they are literally doing is they're now saying this European stream preferred stock thing is now ahead of all the other debt facilities. And the way that we know this is because of the language, right? If they can't pay the dividend on stream, they're going to sell Strike, Strife, and MicroStrategy to get money to then go pay the dividends. So now that they have people locked in to Strife, Stretch, Strike, and Stride, and MicroStrategy stock, all of these, they have people locked in. Now they create another product and say, well, if we don't have the money to pay the dividends, then we'll just sell those other stocks, dilute those shareholders because they're locked in. They can't exit, because if they exit, they're not going to get the dividends and they're probably going to be underwater in their holdings to pay this new preferred stock. And by the way, what is that called? That's called Ponzi scheme, right? And so I'm not saying that it is that, but that seems like what it is. And at the end of the day, this is, in my view, desperation. And they're having a harder and harder time raising capital, which we see. And this whole 10% dividend thing is effectively a bull trap. It's a bull trap. In the previous cycle, Voyager, Celsius, BlockFi, they were all offering 10% yield on your Bitcoin holdings if you lent it out. And then that means somebody's borrowing it. And what are they doing when they're borrowing your crypto? They're trading it. And so if they get margin called, the company gets margin called, your money goes to, and that's exactly what happened, all for 10% yield. And people loved it. They were like, well, you can't get 10% yields in the bank. And this is way better. And that's what people are saying about MicroStrategy. But people and the market is calling BS. And that is why, like I showed you, MicroStrategy is down on the 6 month and the inverse are higher. You can, like, it's almost a guarantee that the stock is going to go down. So is this a time to bet against Bitcoin? Well, I mean, I do believe Bitcoin is going lower, but regardless if Bitcoin goes higher or lower in the medium term, we know MicroStrategy is going to continue to dilute their shares. So if they continue to dilute their shares, and we know they're going to do this, and they're saying they're going to do this, is it time to bet against this stock? I mean, I feel like it's been time. And the people who are in MicroStrategy and all of these other preferred shares, like, they cannot move on for some reason. Okay, like, part of being an investor is being able to exit a position. And when I exit a position, I move on, right? I exited Cardano years ago, never bought back in. I just recently exited Internet Computer Protocol coin, and I'm still seeing comments, Cryptoviser is going to have to buy back at higher prices. It's like, no, I'm not. I don't have to buy back at shit because I'm not going to buy back in unless they do something extraordinary. And so far, yes, they have the technology. Yes, they have the network, but they haven't gained the mass adoption or the institutional interest that I really thought that they were going to gain, especially in the whole AI boom. And they haven't gained it. Maybe they will, but that still doesn't mean that I'm going to buy back into the stock or the crypto. Every trade is an independent trade. And people get caught up in, oh shit, I missed the boat. I got to buy back in. I got to buy back in. And then they end up losing their money. When I exit a trade, I'm out. I'm moving on. I'm not exiting it to re-enter in a month or exit to re-enter in a week. Maybe I'll re-enter in a year or two. But that's if they do it something extraordinary. And most cryptos that we've seen, they don't. Most stocks that we've seen in previous cycles that have been involved in crypto or companies, they're no longer around. And so at some point, yes, it's the right thing to move on, at least in my opinion. You guys can disagree. Let me know what you guys think down below. But let's get into the quantum stocks now. Now, we've been talking about quantum more recently because they're kind of riding the coattails of the AI boom, but they're a very different business with a very different business model and a very different financial situation. The Rigetti CEO on Yahoo Finance said sales don't matter for us. 3 to 5 years for quantum advantage and 7 to 9 years for fault tolerance quantum computers. The reason the CEO can be honest is he sold all of his shares back in May, which was the top of the market. It was the top of the market for crypto. And effectively, I mean, he sold down here. People are going to say, well, he sold the bottom of the market. No, he didn't. He sold because he understands that they don't really have a business model that is cash flowing, that's making money, that's going to make money, right? And so he's openly saying, according to this post, that there will be no meaningful commercial revenue for the better part of the decade. I'm going to play the video for you. Investors are pricing a revenue story around quantum advantage being here and now, that literally it doesn't exist. And the CEO is telling us this. Let's listen in. And by the way, if you're up to this point in the video, don't forget to give the video a free thumbs up. Let me know you're here down below in the comments, and I'd love to hear your opinions as well. And make sure you're subscribed to the channel. That way you never miss a new video. We upload every single day. Let's listen in. On the right, this is the CEO of Rigetti, RGTI, on the stock market.
I mean, you don't have revenues yet, and you may not have them for a couple more years to any real substantial degree. But yet your stock's up over 150% year to date. I mean, do you get concerned as a CEO of a company like this?
Well, intrinsically, you try not to look at stock price when you're making any important decisions. We try to stay focused on the technology and our roadmap and how we get to quantum advantage and beyond. Obviously, it's tempting as any human being to look at a stock ticker and move it up or down. But you try not to overreact to either movements in either direction, and try to keep a level-headed approach to what exactly the company needs to do. In our case, and in quantum computing in general, clearly the goal is to improve the technology, get to that quantum advantage, and then get to the eventual milestone, which we call fault-tolerant quantum computing. We're talking 3 to 5 years to quantum advantage. We're probably talking 7 to 9 years for fault-tolerant quantum computing. So we try to stay focused on the long term. Hopefully the stock continues to do well. We try to be as clear as possible with our investors that we are still, sales really don't matter. It's still all about technology development at this time. But people will react, and it is intrinsically, once you're a public company, it is tempting to look at the stock price. But we try not to react to that.
So real quick.
Well, then it's very interesting to hear directly from a CEO who is basically saying they're not focused on the stock price, and they're not really focused on the sales, because they're just developing a technology. And by the way, I think eventually we're going to have these kind of technologies that they're looking for. But if you think about like Tesla, if you think about self-driving, if you think there's been a lot of robotaxi. Elon's been talking about robotaxi since 2018, since I started this channel, and we still don't have robotaxi, yet we have Waymo. And so just because one company is developing technology doesn't mean that that company is going to be the winner in the end, right? And now, Tesla is still a winner in many regards, but when it comes to robotaxi, we still don't have that, but yet we have Waymo, and we have a lot of other, Zoox, I think, is another one, autonomous taxi-type vehicles. And so just because Rigetti is creating the technology doesn't mean they're going to be the winner here. And so what the market is doing in these quantum stocks, in my view, it's very bubblish and riding the coattails, the same way that we see a lot of altcoins riding the coattails of Bitcoin and Ethereum. And, a lot of, like even the ICP ecosystem or the Cardano ecosystem or the Sui ecosystem, they'll say, well, Solana did this and Wall Street did this with Solana, or Wall Street did this with Ethereum. It's like, yeah, but your coin is not that. Right? And just because your coin, your favorite coin, is in your portfolio doesn't mean that it's going to perform well. Just because it did perform well previously does not mean it's going to perform well again. The same way that like an athlete may win 5 gold medals, but every single competition they enter is the same chances they had at winning the previous ones, right? They may think they have advantages, but maybe another company or another competitor has more advantages. And this is very important to keep in mind. Now, is it the time to short or bet against these quantum stocks like Rigetti, like D-Wave, like Ionic? I don't know. I mean, that's really for you to decide in your portfolio. I mean, a lot of these companies are up 100, 200, 300%. they don't make any money. They're not even close to the quantum technology that they're trying to achieve, right? We're many, many years off. It's the same thing in AI effectively, right? A lot of these AI companies said, oh, this is going to change the world. This is going to change this, going to change this. I just heard ChatGPT is no longer going to give medical or legal advice or, you know, responses. And a lot of that probably has to do with, lobbying from those industries saying like, what are our lawyers going to do if everyone can just go on ChatGPT and get effectively better legal advice than from a lawyer, or medical advice and they're getting maybe not the correct medical advice? Or I've heard from a lot of people who have received better medical advice from these large language models that can source even more of the data to put together, what the issues are than they got from doctors. I was talking to somebody recently who was going to like multiple doctors, multiple specialists, and couldn't figure things out, and put some of the medical work with their medical professional, actually encouraged them to put some of these tests that they got into ChatGPT or one of the large language models to see if it could identify where there was issues. And it said, well, based on the test results and the medicine that you're taking, you may want to switch to this and switch to that. And the doctor said, yeah, let's try that. That makes sense. And it fixed a lot of the issues that they were experiencing. And so they would not have necessarily been able to achieve that if they didn't use a technology, right? I mean, one doctor, one specialist, even if you go to 10, they're limited by what they know. And these large language models, they take all of the data, right? I read an article recently about radiology and radiology reports like x-rays and stuff like that, where they're running them through AI models, and the AI models are able to go through more radiology scans than a human can, and is being more accurate more of the time with what they're actually able to achieve, right? So there are a lot of benefits to these technologies, but there's also a lot of pullbacks in other areas, right? Jobs, job security, effectiveness of just the overall, medical ecosystem. And so the same thing with quantum, right? Everybody is excited about quantum because they're seeing what's happening with the AI markets. But you can see from these charts here that there's a lot of resistance. And I think a lot of the resistance comes from Wall Street calling BS and saying they don't have any viable product. It's the same thing that happens in the altcoin space, guys. We have altcoins that go to, and are still basically at billions or tens of billions of dollars of market cap, and they do absolutely nothing. They have no use cases. Nobody's using them. Wall Street is not interested. Companies are not interested. Developers are not interested. They're not using the technology. And yet they maintain these very, very high valuations until the bull market is over. And bear markets usually wash a lot of these out of, the top 20, top 30, top 50 cryptos, and others pull back in. Now, the issue that we're seeing in crypto specifically is that there's so many cryptos. One could be technically a shitcoin, but it's a better shitcoin than the rest, so it stays in the top 30 or top 50. And so this could be the same case with stocks as well, where there's so many different stocks in the same different realm, and they're all riding the coattails of Nvidia and Meta and Amazon, that they're able to stay elevated even though they have no product, they have no revenue, they have no actual business model, right? I mean, I don't think MicroStrategy is going anywhere. I think they are too big to fail at this point. I could be wrong on that. I mean, FTX was quote unquote too big to fail and they failed, right? So there is something to be said about what's happening with these Bitcoin treasury companies, the Ethereum treasury companies, as well as just altcoins in general. Because people are like, well, Cryptoviser, you said that this was a shitcoin and it's still in the top 50. And it's like, yeah, because it's just less shitcoin than the rest of the 2 million cryptos that are out there. But that doesn't mean it's not a shitcoin, right? And so that's something to keep in mind. And that brings us to another sector of the ecosystem that is also riding the coattails of the AI, which is the Bitcoin mining companies that have pivoted to AI. And they're also at record highs right now. multi-year highs, 10x, 5x, 7x, 8x. And people are getting really, really excited. And that brings us to Iris Energy. Iris Energy is probably one of the biggest with the most exposure in the AI world so far. A very large, deals with like Microsoft. This is the one that we're going to be talking about. Microsoft signs a $9.7 billion AI cloud deal with Iris Energy. But Jim Chanos is calling BS. Jim Chanos warns that Iris Energy is taking all the risk in the $9.7 billion deal. Okay, let's zoom this out. Now, famed short seller Jim Chanos poured cold water on the market's excitement about Iris Energy and their $9.7 billion Microsoft deal. I don't know why this keeps happening on this site. Hold on. Anyway, this happens quite often. I get paywalled as soon as I start playing, recording a video. But anyway, effectively, Jim Chanos is pouring cold water on the whole Iris Energy deal with Microsoft, saying that Iris Energy is taking all of the liability and all of the risk, while Microsoft is just effectively renting their equipment. He said, we did the return on investor capital, etc., of Iris Energy deal with Microsoft. And being as generous to Iron as possible, we used a 5-year life for the GPUs with a 20% residual value and only consider the super cluster or acceleration cost for the DC build out at Childress facility. Now, keep in mind, effectively, they're renting out their GPUs, which are basically the computers that are going to compute. This is very similar to the situation that these Bitcoin mining companies had with Bitcoin mining. One of the things that you have to keep in mind is Bitcoin mining is so capital intensive because every year it gets harder to mine Bitcoin. The machines become more efficient, so you have to constantly upgrade your machines to stay on top. Otherwise, and so you have a constant deprecation of your the value of your equipment. And the same thing goes in AI. The equipment that they have this year, the GPUs. Next year, they're going to have better GPUs that can do better things. So then Iris Energy will be behind. So they either have to upgrade their stuff or they're just not going to be at the same level as these other companies, right? And so that's something that Jim Chanos is calling out here, saying that they have a 5-year life because by the end of 5 years, you're going to have machines that are so much better, so much more powerful, and effectively the equipment that they own today will be worth nothing in 5 years. Chanos continues, saying, despite these favorable assumptions for the Microsoft deal, you can see that the return on capital is 7.7% and unlevered return is 10.2%, figures that are both below Iris Energy's cost of capital. The 20% IRR figures people are throwing around are ridiculous. This is a financing deal with Iris Energy taking all the risk. It's effectively saying, I want to mine Bitcoin, but I don't want to deal with any of the infrastructure. So you just tell one of the Bitcoin mining companies, hey, I will rent your equipment to mine Bitcoin. And I want to make sure that it's, and so they're charging me whatever they're charging me today. And I'm signing a 5-year deal or 10-year or 15-year deal with them. And meanwhile, they have to continue to service that equipment. They have to continue to fix the equipment when it breaks. They have to continue to upgrade the equipment to stay on par with Bitcoin mining. That way it's profitable for us. Otherwise, if it's not profitable, I can't pay them anymore. And then they don't even have a business model, right? And so the same thing is happening with this GPU situation. One of the things that we talk about with Bitfarms specifically is that Bitfarms, their CEO, Ben, has clearly said, we're not playing that game that these other companies like Iris Energy are playing. We do not want to own the GPUs. We want to own the energy. So if a company wants to do a deal with us, we'll give them the facilities, the bandwidth to fiber optics, right? The bandwidth to the internet, the bandwidth on the energy front so that they can power these machines. But we're not going to own the machines because that's a losing game. And so Bitfarms CEO understands the issues that Jim Chanos is highlighting here and that these deals with these other companies are highlighting. This is a great deal for Microsoft. We're also seeing the same type of thing in some of the other deals with Google and with FluidStack as well, with some of the other Bitcoin mining companies that pivoted to AI. But the real big the big thing here is the energy, in my view at least. But again, I do think that all of this hype around these companies and the maximalists ignoring what Jim Chanos is saying. Like, you can disagree with his outlook on the stock and the stock price and the valuation of the company. But what he's saying about how this deal is structured is very valid. And as an investor, you should be looking at it and saying, does this make sense? Are we in a bubble? Are we not in a bubble? But here's the deal. People who bought at $70, they have to ignore him, because otherwise they are going to sell and potentially sell at a loss. And they're not even taking into account that just 1 year ago, in the last 1 year, the stock price was at $5, which means effectively it's done a 15x in less than a year. 15x. And so there's people who bought down here that are looking at what Jim Chanos is saying and saying, oh yeah, this is definite BS. This is not a good deal, but we're going to ride it until we can't ride it anymore, right? Till the end of the cycle. When the bulls, they're never going to think it's the end of the cycle because they bought it 100. I mean, look at Anthony Pompliano. He's still saying on his channel, bull market's just beginning, going back to the beginning of the video. It's not beginning. We're at the end of the bull market. But Anthony Pompliano, his company ProCap, they bought Bitcoin at $100,000+ a coin. And so if it goes under 100,000, they're underwater, and their whole thesis, their whole business is just shit, right? And so they have to keep believing, oh, we're at the beginning, guys. We're almost there. Everything's going to change. Everyone's going to sell their gold and buy Bitcoin. It's like, no, they're not. They're not doing that, right? And that's why we talk about on this channel what we need to do in our portfolios, right? We look at this unemotional. Every trade is an individual trade, and when we exit a trade, we move on. We don't keep looking back and saying, oh, wait, I could have got another 5x. I could have got another 2x. I could have got another 3x. That's a losing game. Who gives a shit? You got out in profit, or even if you got out in loss, you got out, right? Got out of that position. And so Jim Chanos says, as a further sanity check, the 77,000 gigabyte 300 GPUs in the Microsoft deal are being rented out at an implied $2.88 per hour, or $1.94 billion annually, well below where other deals have happened. And so they're getting it at a discount, and all of the risk is on Iris Energy, not on Microsoft. So Microsoft gets what they want at a cheaper price, and they get to advance their AI regardless of whether Iris Energy makes it or not. They don't give a shit. They don't even care where the stock is or is going. And he says, finally, it's not hard to conclude that this deal between Iris Energy and Microsoft will actually decrease earnings per share at Iris Energy going forward, with an increased balance sheet risk and our equity dilution. Because if they have to sell more shares in the open market to raise more money to keep their machines up to date and servicing their machines and all of that, well, where do you think that's going to bring the price? And so are we in a bubble? Is it time to short the market? Is it time to bet against Bitcoin? Well, one thing I would say is I wouldn't bet against Bitcoin in the long term, but in short-term periods, understanding how the market cycles work, understanding where we are in the psychological market charts, exiting the complacency phase, and we go straight down after, and potentially based on the Bitcoin having chart, the downtrend could last for basically 1 year from the top of the market, which was October so far. Well, yeah, I do think that it's time, if you haven't already done so, to consider rotating positions, rotating losing positions like micro to macro did, because the bottom is nowhere in sight. Just because we drop from $120,000 to $100,000 Bitcoin, people are already calling the bottom of the market. The bottom of the market doesn't form in 1 day. It doesn't form over the course of a month. It forms over the course of time. And that's what we've talked about, right? I mean, people are saying, well, Cryptoviser, you've been calling the top of the market since the middle of 2025, so eventually you're going to be right. Well, no, yeah, that we're preparing for it. We understand how these things play out, and you don't want to get out of losing positions when you're losing. You want to get out of losing positions before you start losing. You want to bet against these companies or these stocks or these cryptos before they start dropping. And so you have to be bearish when others are bullish, and bullish when others are bearish. And so we've been talking about MicroStrategy since $400. We've been betting against MicroStrategy since $400, the same way Michael Saylor's MicroStrategy is betting against their stock. And they're creating more debt facilities that are going to continue to dilute all the other shareholders that are already locked into all of these other debt products that they created to basically offset the other debt products that they created. And the Bitcoin price has barely dropped, but it will. And when it does, ooh, the shorts and the levered shorts are going to print, because as you guys can see, the levered longs are already down 70% in just the last 6 months. And the inverse shorts, or the inverse leverage plays, are up when everything else is down. I'll see you guys in the next video. Invest responsibly. Remember, nothing I say on this video is financial advice. These are my opinions, my analysis. You do what you can risk and your risk tolerance in your portfolio. Understand the risks involved. I'll see you on the next one. Crypto on.